The big question right now is if this global market sell-off is over. And in my opinion, I don't know, but I think most likely the answer is yes. On Monday, we saw huge selling due to the Japan contagion fears of the yen carry trade unwinding, and that led for Japan stock market to have its worst single-day sell-off since Black Monday of 1987. Yesterday was a strong recovery day, with the VIX falling from about 65 to a level in the mid-20s, which showed more calm as the volatility number and volatility index went down considerably. So that's pretty bullish, combined with earnings doing really well, 10% year over year, better than 8% increase estimated just a few weeks ago. And also the Bank of Japan looks like it stepped in, saying that they won't necessarily hike interest rates anymore for now, as there's volatility in the markets. So that led to some calm in Japan, which helped stock futures in the U.S. go from down to slightly flat, down to flat to up pretty substantially. The fact that Japan is coming to the rescue so quickly, I think, will help the stock markets. That doesn't necessarily mean that the U.S. should come to the rescue so quickly if they see some distress. Look, I initially said, is there a possibility for an intermediate rate cut to happen in the U.S.? Initially, I thought that was possible because I thought on Monday there would be circuit breakers showing alarms in the stock market. If the stock market sold off, let's say 7%, for instance, in that day, that didn't happen. And because that didn't happen and the market recovered yesterday, as well it looks like today, I think the need for an intermediate rate cut is not necessary, at least as of now. And Mohamed Al-Arian thinks that too. Let's wait for the Federal Reserve to cut interest rates as expected in September. I think an intermediate emergency rate cut would only scare the markets, thinking that the Federal Reserve is trying to act quickly. I think that would scare the markets that the Fed doesn't have it under control and according to plan. So I don't think that bazooka should be taken out unless absolutely necessary, although the Bank of Japan came out to the rescue, saying that they're done hiking interest rates for now as the market's volatile. I don't necessarily think the U.S. will be that quick to do the same, especially as interest rates are expected to be cut in the September meeting. The other reason I don't think it's necessary that the Federal Reserve should have an emergency rate cut is that the fact that the Bank of Japan is calming the markets and taking a rate hike off the table is calming the U.S. markets in of itself. It's doing the work of the U.S. Central Bank for it. So I think that's good news. And another bit of good news is that Palantir had their earnings and they beat on revenue. They issued really strong guidance, and their profitability is basically at a record high, as Dan Ives says that Alex Karp, the CEO of Palantir, is the Messi of AI, and Palantir is really that, considering their commercial contracts as well as government contracts. So the AI demand is still strong, and I don't think that this growth scare that we saw with the Japan carry trade unwinding, I think the fact that the productivity gains of AI and technology that we're seeing should outweigh a growth scare like that. And I'm still pretty optimistic for the weeks and months to come. Yes, we might have a little bit of sideways action into October, but coming November into December, I'm expecting a pretty strong year-end finish for the stock market, in my opinion.